All right. Going short NASDAQ here. Looking for lower prices. Entering off of a mitigation block paired with a SIBI. And that mitigation block is formed right above the 0.8 octant of the fib level if you place a fib over today's regular trading hours opening range gap. So generally when you have a PD array that forms on these levels, they tend to be reactive. So this is after 10 o'clock. So I was wary about open only because we had traded so far up from Asia last night, and I wanted to see, what they did at open, especially after the geopolitical news with Iran and Trump. So I wanted to just kind of see what they did after open. I was looking to trade today past 10 o'clock, so that's exactly what I did. So prior to entering, we traded up into the first percent fair value gap, got rejected, and that started the macro, and that was the 950-1010 macro. And so I entered short. We also have a 5-minute bearish order block that I annotate there. And I'm targeting the upper quadrant of that regular trading hours opening range gap. I think that will be a nice draw on liquidity. I was not looking for longs today because of how far we traded up in Asia. I looked at that, and that to me, news of us not going into Iran as well as that move up, I think would entice traders long. It would entice bullish sentiment, and I didn't want anything to do with that. I didn't want to get trapped. So it was either for me, show me signs that we want to look for lower prices, or no trade. So also on this octant level, you notice how price is kind of closing below it. So that's signifying to me that it's more likely that price wants to trade down. See us tap into that mitigation block a couple of times. Price is also below midnight opening price. This is on my live account. On my live account, I am currently at my development only trading 1 micro. Especially with the volatility. I was on ICT's live stream last night. Or was that this morning? I don't remember, but the last one he just did. And he was talking about, skipping over trading for the week, and or possibly paper trading. And I agree with him. But I also want to gain some experience from this. So if I do trade, again, my rule is to only trade with 1 micro. So it's risk that I can handle. It's something that I can bounce back from. I'll always use a stop loss. Price is trading down. We also have a bearish order block that I have annotated. Price trading back into that order block in a second. We might actually not go back into that order block. I don't remember. And at this point, I'm risk-free on the trade. And I'm looking for big black candles. Limousines downtown. You see us reach up to the bottom of that order block. My stop is a couple of ticks above the mean threshold of that order block. That's my line in the sand for price moving against me. And now I'm looking for that low at 25.027 to get taken out. I want to see us take that low out with an energetic move possibly, and I would rather have a close below that low, not a wick up. Adjust my stop a little bit more, and we get that close below, which I like. And at this point, I move my stop to the bottom of that order block. And this is exactly what I want to see. Groups of large black candles annotating a fair value gap. I'm treating that as like a measuring gap. I want price to treat it as resistance. And at this point, I move my stop to one of the last down close candles before we dropped from that order block. And now we are entering into the next macro, so I'm looking for price to spool here. And you'll see in a little bit, I lost service, so the connection got lost. But we eventually hit our terminus, which is nice. It's probably my best trade I've made this month so far, and I think for the year it's one of my favorite trades. And you see here we just freeze and we lose some connection, but we eventually get it. So good trade. That's all she wrote.